Hello traders and welcome to another video review. Today is Tuesday, 20th of December 2022. Let's find out what is going on the Forex calendar. We got pretty much plenty of the very important data scheduled for release today. Some of them had been released overnight. In example, ABA, Reserve Bank of Australia meeting minutes were released overnight, so we will definitely take a look at the Australian dollar to see, of course, the reaction. People Bank of China loan prime rate had been published overnight. It stayed at the same level of 3.65%. We got the Bank of Japan monetary policy statement and press conference. Both of them took place at 4 a.m. So the Japanese yen is another currency we will definitely take a look at. During the New York session, we got building permits data from the US scheduled for release at 2:30, and at the same time we got the Canadian core retail sales scheduled for release for the month of the October. And as you can see, the market participants expect an increase in core retail sales in Canada from minus 0.7% to 1.4%. So very important event here scheduled for release. Some of them were released already. Let's find out how the markets reacted on this data release. We will start out with the Australian dollar. For our chart of the Australian dollar is showing us a very interesting situation, because we made a high at 6,896. Okay, so that's the high, that's the horizontal line, and we definitely can see a breakout below 100 periods moving average, this blue line here, and the recent test of this line, and then breakout to the downside again. So the local line around 6,679 will act as the technical resistance. Okay, and we broke below this level. Very interesting line is here, and very interesting candle is here as well. Looks like a pin bar with a high volatility pin bar. What we have here is technical support. Nonetheless, it's been violated, so it might act as a resistance again, and this is of course the technical support, the one of the supports that's supposed to work. 6,588 is that level for today. The other technical resistance, as you can see, can be seen somewhere around the level of 6,554. And then of course there's one more located at 6,389. So those are the technical supports for this market. Momentum negative, momentum weak, and it means that of course bears right now are in control of this market. If we zoom out, then we can see what you should see on this kind of a market when you have a previous technical support tested again and waiting to be tested for one more time. 6,557. Very important support, key support for the next market movement. If we apply one more let's say indicator, it would be Bollinger Bands. You can easily see that the after the period of the contraction, then we have the expansion, and now we have expansion to the downside. We almost hit two standard deviations, right? So this market is generally trending still inside of this inside of this bands. Nevertheless, we might see very soon that the breakout below 6,648 will release the new energy, and the lower levels will be tested. So that's the Australian dollar. Let's find out the US dollar to the Japanese yen. The same situation, 4-hour chart. Right, this is the 4-hour chart with the Bollinger Band. As you can see here, we are trading outside the Bollinger Band. We are trading below 100 periods moving average on 4-hour chart. Big candle down here with big momentum to the downside, reaching the extremely oversold market conditions. Let's find out where are we heading. Again, very big candle down, period of the consolidation, few big candles down. Periods of the consolidation, big candle down, period of the consolidation, big candles down, bounce, are trying to bounce, big candle down, we are trying to bounce, go slightly lower, trying to bounce, big candle down. Who has the control over this market? It's obvious, those are bears. Let's find out what is going on daily then. Look at the daily now. We are out of the daily Bollinger Bands, okay, zone. If you can take a look at it here. Yeah, we are moving out of the Bollinger Bands. Where is the target then? Where is the target if we are moving out? Target is 130.42. This is the technical support. We already broke below yesterday's close. Of course, it's obvious. We already broke below the beginning of the December local low. So this level here is now violated. It's clear as the sun. We are trading when we get the line here, the trend line line, there you go. It's obvious we are trading below the trend line as well. So that's the current situation. Let me just zoom in first. There you go, and maybe once more. There you go, and you can see it for yourself. Breakout below the last week low, below 100 days moving average, below trend line, very important trend line, tested and recognized many times into the negative territory, weak momentum supporting the bearish outlook. So the bears have the control over the market right now. We need at least break above 134.15 in order to do some kind of a let's say pullback. Nonetheless, we are still trading below the trend line. Next target is here. Eventually the next target, maybe I will put it as well, eventually the next target might be somewhere even here, 126.38, but that's the daily time frame chart, please remember. So keep continuing the down move on the US dollar to the Japanese yen without any problems whatsoever. So that's the US dollar to the Japanese yen. We talk about the Aussie. I think it's time to take a look at the US dollar to the Canadian dollar, because data and core retail sales are coming into the market. Very interesting situation on the US dollar to the Canadian dollar, because we are still trading above this 100 days moving average, close to the upper bound of the Bollinger Band, and we are heading towards this level. This is the technical resistance. This is the technical resistance around the level of 1.4. The exact level is 1.3976, and the market is trading, as you can see here, inside of the channel as well. So this is the trend line here. We will change it into the orange, and this trend line might be, of course, copied. So we have the other trend line, and we can do the channel. So that's a kind of a channel. Nonetheless, we are still inside of the Bollinger Band, inside of the channel, and we are approaching the other eventually technical resistance, which is not the swing high. Nevertheless, it looks pretty important, 1.3807. So that's the other technical, of course, resistance. If we zoom in a little bit here, we can clearly see that this movement to the upside, this movement here inside of the channel, is still corrective in nature. All right, so everything we see here looks corrective as well. So in my opinion, after the short analysis, what I can say is, where is my ABC? There you go. From the top, the correction is A, B, C. That's the wave A. Now it's a B, so might be a little bit more, let's say, a little bit more complex. And what we are waiting for? We are waiting for the wave C to the downside. Let me just move the wave C to the downside here, which will be basically below the wave A low. So this is the level that we want to keep an eye on as well. That level of support and low of the wave A. So wave C supposed to break below this level and move lower. So waiting for the wave B to complete, maybe ABCX, ABC. So that's a complex correction in the wave B. We are waiting for this wave to complete, waiting for this wave to be done. It's hard to say when, because it looks like it might be completed soon. Of course, invalidation of this scenario comes with the wave B breaking above the beginning of the wave A. So that's the line in sand for the wave B and for this whole scenario. So far we are waiting for the top in the wave B. Okay, and then wave C to the downside should come very, very soon. And that's the situation for the daily time frame chart of the US dollar to the Canadian dollar ahead of the core retail sales data scheduled for release 2:30 tonight. So that's my outlook for this three pairs that should see some kind of increased volatility today during the data release and maybe a little bit after. So thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.